So you keep hearing it, right? The economy is booming. We're living through this incredible period of prosperity. But what if I told you a lot of it is just an illusion? Let's dig in and see what's really going on. I mean, turn on the news, open any financial website, and it's all you see. Stocks are hitting all time highs. Your portfolio probably looks pretty good. It really feels like a party. And on the surface, yeah, it absolutely looks like we should be celebrating.
But, and this is a big but, what if that's only half the story? What if we've all been looking at this with one eye shut? Because the moment you change your perspective, even just a little bit, a totally different and frankly, much more worrying picture starts to take shape.
Okay, so to get that full picture, we have to talk about something called the currency blind spot. It sounds a little technical, but it's not. It's really just a different way of measuring value, but trust me, it's a shift that uncovers a truth you're probably not expecting. And this is where it gets really interesting. So on the left, you've got the story we all know and love. You measure the market in good old US dollars, and boom, it looks like a runaway success. But then you look at the right. You measure that exact same market against other big global currencies, and whoa, the picture totally changes. It's flat. Or in some cases, it's even going down. So what does this mean in plain English? It means your actual purchasing power on the world stage, the real value of those record high stocks, has actually dropped by about 10%. Your money just doesn't buy as much internationally as it seems, and that's a huge deal. Okay, so if the real value is a little shaky, then why does everyone feel so rich? Why does it still feel like such a boom time? Well, that leads us right into the next piece of this puzzle, the great spending spree. It all comes down to something called the wealth effect. Think about it. The value of people's biggest assets, we're talking stocks, we're talking real estate, has just gone through the roof, at least, on paper. And when you look at your account statement and see those huge numbers, you don't just feel wealthy, you start to act wealthy. And that feeling, it has a massive real-world impact. It's these wealthy households looking at their appreciated assets and feeling like they've won the lottery, who are really driving this huge wave of consumer spending we're seeing everywhere. But, and you knew there was another but coming. This is where the story takes a really sharp and kind of scary turn. Because all this spending is creating a super dangerous paradox. It's pulling people straight into what we're calling the high-income debt trap. Yep, there's a huge problem. Because while everyone's out there spending and feeling like they're on top of the world, something pretty serious is bubbling up just under the surface. And that problem is called financial difficulty. Now look, this isn't about people being poor. It's this bizarre situation where you have folks with high incomes, with huge asset values on paper, who are actually struggling with their day-to-day bills and debt. They're what you'd call asset-rich but cash-poor. And here it is. This is the real bombshell. A record-breaking number of these high-income households, yep, the exact same people who are out there driving all this spending, are now technically in financial difficulty. It's nuts. They're spending like there's no tomorrow, but in reality, they're stretched incredibly thin. So all of this, it brings us to one final and honestly pretty unsettling question. We've all played musical chairs before, right? Well, what happens when the music stops? Because let's be really, really clear here. This whole feeling of prosperity, this whole spending machine, it's all built on a foundation that's actually super fragile. The whole thing only works as long as asset prices, stocks, houses, stay way up here in the stratosphere. So, what could knock it all over? What could pull the rug out? Well, it could be something as simple as bonuses getting smaller. Or maybe those investments that have been flying high suddenly start to dip. If either of those things happen, that spending spree doesn't just slow down, it slams on the brakes, hard. And that really leaves us with a big, lingering question, doesn't it? If the so-called smart money, the affluent people we assume are propping up the whole economy, are secretly stretched to their limit, who exactly is left to hold things up when the good times finally end?